Well, for the last 6 years, the number of companies worldwide declaring insolvency has been falling, but that may be about to change. The world's biggest trade credit insurer is warning of growing uncertainty and says Asia may see its first rise in insolvencies next year, indeed since the financial crisis. Euler Hermes Chairman Wilfried Verstraete joins us right in the studio today. Wilfried, thank you very much indeed for joining us. Okay, well, give us an overall holistic view of what's going on here, and just tell people what you actually do and how credit trade insurance works.
Well, maybe just one word explaining exactly what Euler Hermes does. We are insuring the payment of invoices between companies, meaning that we are covering the risk of insolvencies of one's clients.
Okay, so overall, how's the market been since the global financial crisis, and are things getting worse for companies?
Since the financial crisis, we have seen steady year-on-year decline in global insolvencies worldwide. This now has come to an end, and this is why we call it now the U-turn in global insolvencies. We will see a rise in 2015, and we will see another rise in 2016.
So this naturally brings me on to the point, where are we going to see these rises in these insolvencies then? And which industry groups are most vulnerable too?
To be very schematic, we will see a rise in insolvencies, in particular in Asia Pacific and in Latin America. We will see a stabilization in the rest of the world, notably in Europe and in the US.
So you're talking about some of those which are the hall of fame, and now some of them are going to hit the wall of shame. And you talked about the BRIC nations, but not India, because you don't have data on that. So it's the BRC countries.
Well, India is probably, out of the famous BRIC countries, the one that is doing best amongst them. When you look at Brazil, Brazil is in deep recession, and Brazil will continue to be in deep recession next year. Think about Russia. The impact of the UN sanctions will continue, and we forecast another deep recession in Russia in 2016. I would say further, there will be a negative impact of the declining energy prices for Russia. If you think about China, we all know that GDP growth will further decline in 2016. Now, whether it's 6 or 6.5%,
yes.
doesn't really matter. What is important for China is that we have seen a 25% increase in corporate insolvencies in 2015, and we forecast another 20% increase in 2016. Think about that the number of days sales outstanding, which means the number of days that companies wait until to pay their invoices, has increased by 28 days in the last 5 years.
What would it be normally on average?
So world average is around 60 days. In China, we are heading towards 28 days, which means that globally in China you have to wait 1 month longer to be paid than in the rest of the world.
That's quite telling, isn't it, I suppose, in many ways. But tell me something, when is an insolvency in China as well? Because sometimes you just get a company just shutting its doors saying, bye, I'm gone.
Absolutely. That is one of the difficulties in China. First of all, the insolvency laws are less sophisticated or less experienced than you would see in other parts of the world. We have cases, indeed, where companies just shut down and disappear. But that means that you will never get paid, and that is where then the credit insurer steps in.
So where is this coming from, in your view?
It's what we call the 3D. It's a decline in demand, it's the deflationary pressure, and it's the overall debt levels. Think about that. The debt levels in China, corporate and public debt, are 160% of GDP. That's huge.
But the point being here is surely that this is something affecting specific industries, surely. Which are the ones which are worse? Which are the ones which are perhaps doing best?
The ones that are doing best, let's start with these ones, are the ones that are linked to private consumption. Private consumption in China is doing pretty well. What is problematic these days is everything that is linked to export. Global demand is falling. And of course, everything which is linked to construction, meaning heavy industries like metal, steel, chemistry, all those industries are hurt pretty badly in China these days.
Now, no man is an island, no company is an island either. So this has got to affect things all the way down the supply chain when you do see this happening.
Absolutely. Think about countries that export raw materials to China. Countries like Australia, like Malaysia, they will be hit very badly. On the other hand, you also have countries that are exporting electronic components, like Taiwan, like Korea. And also there, we will see a further drop in GDP in 2016.
Wilfried, I don't want to just keep it on the doom and gloom possibly in this part of the world and in China in particular, but which of the parts of the world doing well then? I mean, we've got this will they, won't they raise interest rates at the Fed. I mean, how's the US doing? How's Europe doing? Is Europe coming out of the woods?
Europe is improving. It is far from what it used to be in terms of GDP growth, but it is steadily improving year after year. I think that all the most recent by the European Central Bank definitely helped. They came in late, but now there is some positive news from that side. Regarding the US, we will continue to see positive growth in the US, anywhere between 2.5 and 2.7 GDP growth. So the US is climbing out of the problem.
But on a micro level, how's it?
Well, on the micro level, you will see that, for example, in Europe, the country that is doing best these days is the United Kingdom. The UK is doing pretty well. We also see countries that were in deep trouble, like Spain, like Portugal, climbing up, and they are doing much better than they ever were.
Well, Wilfried, thank you so much for coming and joining us this Tuesday morning. Wilfried Verstraete from Euler Hermes.